Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
These are some of the key topics that we will be looking into in today's program.
Chile's Codelco, the world's top copper producer, said on Friday it boosted output by 4.7% in the first 6 months of 2020 even as the coronavirus outbreak forced it to rely on skeleton crews. Pre-tax profits of $380 million jumped 20% over the year-ago period, the company said. Cash costs plunged 9%, helping boost profits alongside strong output. The early measures taken by the company to protect the health of its workers allowed us to maintain operational continuity, the company said in a statement. Codelco said it produced 744,000 tons of copper in the first half, attributing the increase to improved processing, higher ore grades and resilience in the face of the pandemic.
Moving on to the top news in the energy sector.
Russian oil and gas condensate output increased to 9.8 million barrels per day on August 1st -2 from 9.37 million barrels of oil per day in July as the country eases production curbs under an OPEC Plus deal, a source familiar with data said on Monday. The Energy Ministry declined to comment on the data. OPEC Plus producers, which include members of the Organization of the Petroleum Exporting Countries and allies such as Russia, from August 1st have agreed to slim their output cuts to 7.7 million barrels per day from 9.7 million barrels of oil per day. Russia has said it will increase its crude oil production by 400,000 barrels of oil per day as part of that deal, which does not include output of gas condensate, a light oil.
We will now look at the top news in the agricultural sector.
Soft wheat exports from the European Union and Britain in the 2020/21 season that started on July 1st had totaled 635,453 tons by August 2, official EU data showed on Monday, 68% below the volume exported by the same week in the previous season. EU 2020/21 barley exports had reached 254,305 tons, down 60% from 2019/20, while EU 2020/21 maize imports stood at 1.01 million tons, down by 52%.
Next we have agricultural price moves.
U.S. wheat futures dropped 1.7% on Monday as rising expectations for harvests in Russia and Australia cast a shadow over already weak demand prospects for U.S. supplies, traders said. Russian agriculture consultancy IKAR on Monday said it had raised its forecast for Russia's 2020 wheat crop to 79.5 million tons from 78 million tons. Soybean futures firmed to a one-week high, breaking through key technical resistance points on support from a fresh export sale that added to recent string of deals. Corn futures edged higher, bouncing off a one-month low hit last week on bargain buying and some support from gains in the soybean market. But the decline in wheat stymied any rally attempts in corn. Chicago Board of Trade September soft red winter wheat futures were down 9 cents at $5.22 minus 1/4 a bushel. CBOT November soybean futures were 4 cents higher at $8.96 minus 1/2 a bushel. CBOT December corn was up 1/4 cent at $3.27 minus 1/4 a bushel.
We will now take a look at energy price moves.
Oil prices steadied on Monday as rising COVID-19 cases around the globe and oversupply worries fueled by the prospect of OPEC and its allies winding back output cuts were offset by positive industry data in Europe and Asia. Brent crude rose 5 cents or 0.1% to $43.57 a barrel by 13:44 GMT, while U.S. West Texas Intermediate crude gained 6 cents or 0.1% to $40.33. Over the past month Brent has been trading in a range between $41 and almost $45.
Moving on to metal price moves.
Futures prices of steelmaking ingredients in China rose on Monday, with iron ore posting its biggest one-day gain in 8 weeks and coke scaling a 12-month high, on strong demand as the world's top steel producer continues to ramp up output. The most traded iron ore contract for September delivery on China's Dalian Commodity Exchange closed 4.2% higher at 873 yuan, $125.11 a ton, its best day since June 8. Iron ore's September contract on the Singapore Exchange climbed 3.4% to $109.57 a ton in afternoon trade.
Finally, we have the most recent news on the financial market.
The dollar was up against a basket of currencies on Monday as investors unwound some recent short positions following the currency's weakest monthly performance in a decade. The dollar index, which measures the greenback against a basket of leading currencies, posted a more than 4% decline for July, its biggest monthly drop since September 2010. The weakness has been tied to market expectations for further easing of U.S. monetary policy, and a lack of agreement among U.S. lawmakers on further fiscal stimulus. Falling U.S. bond yields have also been cited as a factor. The dollar index was last up 0.5% at 93.836. Against the Japanese yen, the dollar gained 0.4% to push past the 106 yen per dollar mark. On Friday, the dollar posted its biggest daily rise against the Japanese currency since March, halting a rally in the yen which saw it gain 3% in July. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.